Asian economies have generally been doing okay relative to the West. If you look at the headline markets in Asia, China's growth has been slowing relative to historical levels, but even still is around the 7.5% level, so still quite healthy. India's been held back by inflationary pressures, which have been more sticky than in many of the other countries within the region. And we've seen the ASEAN markets, the more domestic-focused markets, such as the Philippines, such as Thailand, are doing quite well recently relative to elsewhere in Asia. The attractions of the Asian stock markets. Well, first of all, from a macroeconomic standpoint, Asian economies are in pretty good shape, particularly relative to Western markets and the Eurozone at present. So we are benefiting from the fact that countries have fiscal surpluses. And then we're also benefiting from increasing wealth levels and employment levels and attractive demographics. And that's giving a lot of opportunities, particularly in the consumer-focused sectors. And we would also include financial services within those consumer-type sectors. The outlook for corporates in Asia is still pretty positive. From our perspective, we see balance sheets are in a very strong position. There's not a lot of leverage at the company level. Some of the inflationary pressures which we were seeing in the last few years have eased somewhat, albeit labour inflation is still impacting some companies. And generally, the top line and revenue growth is still decent from the companies that we're seeing in Asia. So in that respect, we're still quite optimistic for the future of the corporates within Asia generally, and specifically within Edinburgh Dragon. In terms of China, we've already seen a slowdown in the GDP growth from the official numbers, albeit in the most recent data, it appears that the growth level has bottomed. So that's good news, I guess, for the markets. In terms of Edinburgh Dragon, we've historically been underweight to the Chinese market and preferred to access China through Hong Kong. I think it's one misconception of the Asian markets that China is the real opportunity. And certainly there are good opportunities to be had in China. Some of our Hong Kong companies like Hang Lung Group, Hang Lung Properties, have been benefiting from Chinese growth, from retail demand, from increased consumption. But there's a lot more to Asia than China. And if you look over the last 3 or 5 years, it's actually been ASEAN and Southeast Asia that have been flourishing. So we still tap into the Chinese growth story, but it's not the be-all and end-all as far as we're concerned. Our outlook for investing in Asia remains very positive, both in terms of the economies within Asia are in relatively good shape. Okay, China or India may be slowing, but if you look at the rate of their GDP growth, it's still very healthy, and that's still going to mean good opportunities for companies there. I think the other thing you're increasingly going to hear about is the importance of consumption within the GDP growth. So for example, in China's last GDP number, the percentage contribution or percentage growth coming from consumption has been increasing, and the economy's been becoming less reliant on investment and infrastructure. And I think that's important for how these economies develop in the longer term.